Good afternoon. Today is Monday, August 8th. I'm Joe Terril, president of Terril and Company, independent wealth managers in St. Louis, Missouri. This is another video update for the benefit of our clients and many of our constituents and people who like to follow our thoughts about the economy, investment markets, etc. Since our last update, the Federal Reserve has continued to raise interest rates. However, the preponderance of market participants have seemed to develop the idea that the Federal Reserve is going to cure inflation and bring it right back down to 2%. Therefore, interest rates will not need to go much beyond 3%. And the economy is going to stay strong and we will not have a recession. Of those three statements, the only one that we agree with is the economy will stay strong and we're going to have a good worldwide economy. However, the Federal Reserve is not going to be able to bring down inflation from 9.5–10% to 2% anytime soon. It's going to take several years for the Fed to get inflation back down something close to 5%. Interest rates are going to be higher than what most people anticipate. And indeed, we've seen this recently with what some of the Fed governors are saying at speeches and various conferences, where they are commenting that interest rates may, on Fed funds anyway, may have to go 4–4.5%. We concur with that. The Fed's going to have to raise interest rates a lot higher, and at some point the Fed's going to have to actually drain banking reserves from the system. This is something they're not doing right now. They're trying to influence the money supply without draining any bank reserves. Questionable about whether that will work or not. So our position right now is to continue to avoid any type of long duration in fixed income, staying very short with our fixed income maturities. Anything from 7 months to a year, we're able to get 3.75% on. That'll do us while we wait to see how this is going to play out. And we've seen a nice stock market rally during the month of July. I don't believe this is going to continue to rally. There are people that are insisting we're getting ready to go back to all-time record highs. Absolutely disagree with that. Stocks are going to have a difficult time for a couple of reasons. As interest rates go higher, the multiple stocks sell at will go lower. And the corporate earnings that we've seen so far in the second quarter, I wouldn't exactly call them stellar. And the outlook that we have had is one of higher inflation is hurting corporate profitability. So for the moment, we're being very disciplined. We think there'll be better buying opportunities on stocks in the fall. We think interest rates are going to have to go higher. However, the economy is very strong and we see it being resilient and continuing to be this strong. With that said, we'll end there for today's session. Thank you to Brian Curtis for helping us produce these updated videos. We'll be back in a couple of weeks with an update. Thank you.